Assalamualaikum warahmatullahi wabarakatuh. Hello, my name is Nabila Amelia D. I'm from Business Management of the Managerial Accounting Study Program. Here, I want to present my presentation about bank reconciliation to fulfill my English task. So, what is bank reconciliation? Bank reconciliation is a report that explains the difference between the book balance of cash and the cash balance report on the bank statement for purpose of computing the adjusted cash balance. Because cash is the most important element of the company ledger, so we have to make sure that the balance between bank statement and the company ledger are the same. So, what cash that makes the difference and what should we do? According to the bank statement, we add the cash balance if first, deposit is already recorded by the company but the bank not yet. So we have to add the bank statement's cash balance in the reconciliation if the bank is not recorded the deposit yet. Second, deposit in transit. Deposit in transit means the deposit is still on process. It means the bank is not recorded yet. It's almost the same with the point 1. So we have to add the bank statement cash balance in the reconciliation too. Third, bank recording errors, expense recorded too high. If the bank recording errors and recorded expense too high, we have to add the cash balance and cut the expense so we got the appropriate nominal. And then the fourth, bank recording errors, receipt recorded too low. If the bank recorded receipt too low, we have to add the cash balance in the reconciliation so we got the appropriate nominal. Next, according to the bank statement, we cut the cash balance if first, outstanding check. What is outstanding check? Outstanding check means that company is get out the check, but the people who get the check is not take the cash from the bank with the check. So the bank don't know about the check, but the company is already recorded as an expense. So we have to cut the cash balance of bank statement in the reconciliation. Second, non-sufficient fund check. Non-sufficient fund check means that the check is not enough to pay someone. Our cash nominal is not enough. So we have to cut the cash balance in the bank statement in the reconciliation. Third, bank recording errors, receipt recorded too high. If bank recorded receipt too high, so we have to cut the cash balance in the reconciliation so we get the appropriate nominal. The last, bank recording errors, expense recorded too low. If the bank recorded expense too low, we have to higher the expense and cut the cash balance in the reconciliation. Next, according to the company ledger, we add the cash balance if first, receipt recorded by the bank but not yet the company. For example, the case in bank transfer, demand deposit, and interest revenue, we have to adding the company ledger cash balance in the reconciliation is if these three cases happen. And then the second, errors recording, expense recorded too high. If the company record expense too high, we have to cut the expense and we adding the cash balance in the reconciliation so we got the appropriate nominal. And the last, errors recording, receipt recorded too low. If the company is recorded receipt too low, we have to we have to adding the cash balance so we get the appropriate nominal. According to the company ledger, we cut the cash balance if first, outstanding check. Outstanding check means that the check is still out. The people is don't don't take it from the bank. So we have to cut the cash balance in the reconciliation. Second, errors recording, expense recorded too low. If the company record expense too low, we have to record the expense higher and we cut the cash balance of company ledger in the reconciliation. And then the last, errors recording, receipt recorded too high. If the company record receipt too high, we have to cut the cash balance in the reconciliation so we got the appropriate nominal. For example, here, the first case, the company released a $5,000 check, the bank not recorded yet. So, the bank is not recorded yet. So we have to record it here. Outstanding check as the deduct $50,000. Second, 9,800 receivable has been billed by the bank. So the company don't know about the bill, so the company have to record it here. Balance as depositor record, receivable collected by bank 9,800. And then third, a deposit of 20,000 has not been recorded by the bank, so the bank have to record it here in deposit in transit 20,000. And then fourth, $20 for interest revenue. It means the company still don't know about the revenue, so the company have to record the revenue. Here, interest earned 20. At the cash balance, interest earned 20. And then the last, 720 for NSF check, service, and errors charge. Here, the company don't know about the expense, so the company have to record it as an expense. Here, deduction, NSF checks 520, service charge 100, error on check 100. So we got the appropriate nominal and the cash balance is the same, $270,000. I think that's enough from me. Thank you for your attention and see you.